May profits be upon you. Welcome to another weekly market forecast. We're going to take a look at oil, crude oil, WTI, crude oil, light and sweet, and all kinds of good stuff. Now, on the monthly um, time frame, what are we looking at? All right, we can see that the market's been, at its high around 2008, it started to make its way down with impulsive move, a corrective move, impulse move, corrective, impulse. And now we have this corrective move to the upside, and it looks like a V-shaped recovery. That's what it looks like. But it's still, uh, uh, we've been hitting lower highs and lower lows all the way down. All right. But are we seeing a change in things? I don't know. But also, we'll also note that you can see that we are squeezing here. All right, price is narrowing, turning into this wedge formation where we have lower highs and higher lows, and it's squeezing. And usually that means is going to pop in one of these directions, either up or down. All right, because it was impulsing to the upside and then started in this formation, um, it looks like a continuation pattern to me, and we should be looking for an upside uh, impulse coming soon. But right now, we're still squeezing. All right, and if we go to the weekly, the question I like to ask is, how did last week end in relation to the previous week? All right, last week closed below the low of the previous weekly low. All right. And that indicates that we didn't just wick through that low here. Let me mark that low. All right. We didn't just wick through this low here. No, we traded through it. All right. Into this fair value gap here and here. All right. We're in this fair value gap. Now we could give a two candle turnaround here, where this candle enters and the next candle is a bullish candle, and we can turn around and do our thing. That'd be an interesting scenario. But because of things going on in, geopolitically speaking, uh, things going on in the Middle East, the there's some uncertainty going in there. But the the war between the Palestinians and the Israelis we're at a ceasefire. There's peace talks going on. There's some kind of they're trying to work out some kind of agreement as far as the future. Then Trump wants to throw in, hey, the U.S. can take over Gaza, and throws everything back into uncertainty again. But are we going to see structurally? Are we going to see the fair value gap hold? There is a order block down here that I don't have a lot of faith in. Why? Because you see how it uh, displaced above, but it didn't leave. What I like to look for is when you have the sell before the buy. That's your order block, and you have the displacement. I'd like to see what do you call it? Ideally, I like to see price move up in that displacement and leave liquidity lows along the way. This one is straight. That usually means that when price comes back to revisit, it will pass through that, using it as liquidity in order to get to the larger area of demand. All right. So we could be coming for these lows when price revisits this area of demand. All right. So I'm gonna, but it's worth watching. Okay. Right now, price is the fractal structure is bearish. All right, and I want to go with the fractal structure. We've been bearish since the middle of January, and I want to go with that. We are in retracement. I believe the objective is to get down to this area. All right, and so far, sells have been the order of the day. All right, now we taken out this low, and you see uh, we wick past it, and then price comes back and takes out that wick low. We are It just confirms that we are definitely in a we're trending down, and that price is respecting premium arrays. All right, and premium arrays are the um, highs and the uh, uh, bearish order blocks and bearish fair value gaps. All right, now you'll notice that coming down here, there's no bearish order, no bearish fair value gaps. But when price pulls up and leaves these wicks like that, you got to understand that that move down and up is a push down and a correction, a push down and a correction. You understand? So it made a lower low, a lower high, and then a new lower low. I'm looking to ride that trend. You understand? Good. Now, if we go here, why do I have this marked out here? All right, I'm going to show you why. Let me get rid of it so you can see. All right. What price has done is respect, like I said, the premium arrays. If you look at a trading range, all right, this is your trading range here, top and bottom. You want to divide it in half. This is your equilibrium, 50% of your trading range. This is the upper range, the upper range, and this is the lower range. This is discount, and this is premium. Premium prices, premium arrays, discount arrays, discount prices. You want to take your shorts from here. You want to take your longs from here. All right, and that's how you divide up a trading range, right? And when price pulls this low, makes this low here, all right, and then goes up and makes that high. All right, this is your fractal range, your fractal structure here. All right, this is the top of your range and the bottom of your the bottom of your range and your top of your range. Excuse me, and this is your 50%. All right, but what you want to see is when price makes these lows, when price takes those lows, like we took this low here, you want to see price uh, push back up into a premium array, which is demand. All right, there is a buy up before the sharp sell off here. All right, price didn't quite make it up that high, but what did it make it up to? This fair value gap right there, right? And you saw price move back down, and we finally took this low. That wick low. And when price does that, what are we looking for? Price to pull back into supply. All right, and here it is. And price did wick up there and pulled back down, and we went lower. We confirmed the bearish trend. We continued with it. All right, price pulled back again into this area of supply. All right, when you pick these areas of supply, these order blocks, right, this becomes your protected high. This becomes your protected high. This becomes your protected high. And if price pushes down, pushes down, pushes down, and then all of a sudden pushes back up, once we break that, the bias change. You understand? That is a market structure shift, a shift in the market from bearish to bullish. And that's where you want to look for price to come back into an area of demand, and you take that up to the new high, and you want to see that continue up higher highs and higher lows. The way this is continuing down, lower lows and lower highs. I hope that's easier for you to follow. If you have any questions, make sure you leave a question in the comment section. Okay. And so what am I looking for right now? Prices in this area of supply, which swept these highs nearby. And I'm looking for price to continue down into this this demand zone, this order block, this bullish order block. All right. Again, it's got the dotted line going around it, the white dotted line going around it, because I'm not so sure it holds, but we'll see once price gets there. But I do believe it'll get there. So my immediate sell side liquidity targets will be obvious. The lows as it continues to make lower lows, lower highs, lower highs, lower lows into here. And I would love to take a a short into to this TP and have this as my TP. Yes. Now, once it gets down here, what do I expect it to go? You see this orange line here? That designates another order block just below that weak order block there. This is the sell before the buy, and there's a sharp buy up. This creates an area of fair value. Price comes back into it to continue higher and making a new area of fair value. All right, I'm looking for price to come back into that. But I think it goes here. It goes below this this order block. I'm not so sure this is a protected low. I'm thinking that we're going to hit this line, which is the midpoint of this fair value gap. And I do believe that we'll find support there for higher prices. That'll be right around 68.20. That's the area I want to look at. Keep my eye on. But we'll see what it does once it reaches 69.67. All right, which is the top of this this order block here. Okay, so I'm looking for higher prices here. I'm going to be patient and not miss that. It may seem counter trend, but we are in a retracement after an impulsive move to the upside, and this retracement is probably around 786 right now. All right, on if you put your Fibonacci retracement tool on it from the impulse, the start of the new impulse to the downside, this is probably around 786. Let me see, 705, 705. I'm sorry. All right, but here some people will start it here, okay, because this isn't a significant enough pullback. All right, and that put us at the golden ratio. And if price does hit our area here of interest, then it'll be at these Fibonacci levels that I'm expecting will probably show some support. That makes sense. All right. If you have any questions, leave them in the comment section. And I appreciate you watching, and I will see you in the next video. May profits be upon you.